Antonio Neri, HPE CEO, here to break down the numbers in a first on CNBC interview. This is a little deja vu with what we got from Dell, a few quarters ago when it was great growth in the AI server business, but at the expense of margins. Is that the story here?
Well, good morning, Sarah, and thank you for having me today. So first of all, we are very proud of the results we posted. We did what we said we would do. In fact, we grew revenues 10% year over year with a significant conversion in the AI business. But at the same time, we also improved our operating margins at the company level by 50 basis points on a sequential basis. And when you look at the server business, our operating margins actually improved 70 basis points year over year. And so despite the mix to AI, which is everybody's concern, our operating margins actually expanded. And when you look at the gross margin level, which is the other key metric which you're referring to, the reason why the gross margins were down is because the less contribution from our HP networking business, which obviously the networking business is now on the trough on the way to recover, because we saw also revenue and the gross margin expansion in the quarter. However, the contribution was significantly less. So that's why, when I look at our results, there is nothing more than to be proud of what we have done. And honestly, we are very excited what comes next, especially as we think about the Juniper integration, which will be an accelerator of our gross margin profile.
So the gross margin, as you referenced, 31.8, the street was at 33.3. Where does that go? What are you telling investors about that today with the stock down 7% on, as you say, what was a good quarter?
Yeah, so again, the biggest contributor to that decline was driven by the lack of revenue in HP networking, which is obviously an industry trend we have seen for the last several quarters through the digestion post-COVID. But the good news there is that we see now sequential recovery. So the biggest driver was that, where our server business on the segment side, we actually improved operating margins, and at the product level, we actually improved gross margins for both the traditional server business, which was up significantly, and our AI business.
What are you seeing in the AI business? As we've got a couple quarters under our belt with growth. What are you seeing from enterprise as to adoption and where we are in the cycle?
Yeah, I think about that in three segments, right? Obviously, the service provider segment and the model builders that are building these large language model momentum is very, very strong. We participate there with discipline on an eye on profitability. And then the other two segments are sovereign clouds and enterprise. On the sovereign cloud, we see high interest now. Obviously, the sales cycles are longer because ultimately it takes time to complete the procurement cycle and the design of the products. And then on the enterprise, we saw high interest. Today, enterprise represents mid-teens in our orders and in our backlog. And we introduced now what I believe is going to be a very important key driver for us of growth, which is the HPE Private Cloud AI, which was co-engineered with NVIDIA. And that also includes software from HPE as a part of our GreenLake platform, because ultimately customers need a hybrid experience for AI. So a lot of interest, mature use cases are coming online. We focus on manufacturing, healthcare, and as well as customer services. And we have now what I call AI in the box. With 3 clicks and less than 30 seconds with our HPE Private Cloud solution, we actually can have applications in the AI space up and running, which ultimately is a source of time to value.